What's up, everyone? Drew, aka Catching Rockets. I hope y'all had a good day today. I think for people in Shorty's Discord, we did a pretty good job calling out levels. Had a couple call outs that weren't so great, but for the most part, I mean, we called out some pretty massive moves, also called out some scalps. And then for people over in Keenan's Discord, I was calling out a lot. And I think most of them were profitable. I don't think I called out anything that wasn't profitable. They might not have made like the full move, but definitely called out a lot today. I wanted to do something a little bit different as well today. For people that already saw this discussion, like in Keenan's Discord, you already know the answer, so maybe don't participate. But for people that didn't see the conversation, what happened today, like what on this chart that we're looking at right now happened today that is really bad for bullish scenario going forward. And I can kind of zoom in a little bit for you guys. And then while you guys come up with the answer for that, I'm going to start looking over. I have a really nice looking option set up for tomorrow that I'm pretty excited to share with you guys. So we'll look at that first. And also, for people that didn't see it, Tesla's next stop is going to be like right around 216, 217. So we are coming down to here. Let me draw this, or let me put this on here. Oh shoot, it's 3. So, should be going somewhere, I mean, at least lower than this low here, 217.04 or whatever it is, roughly. 217.02. We're going to be breaking that. The option trade I have for you guys is going to be on Netflix. And it's a doozy. Excuse me. Let me see. Session volume off. Okay. So if I mouse over, you guys might be able to see kind of what I'm looking at. Like here, this was resistance, which then became support. And now that we're back above it, I want it to get broken before I get into puts. So 889 and 90 cents, I will enter into puts on Netflix. My first trim will be 881 and 41 cents. Second trim is going to be 871.61. Third trim 861.81. And then I'll be closing at 855.41. This is a day trade. It should play out in one day. And it will be money. Okay? Excuse me. I still have this cough, so I apologize, everybody. It's going to be what it's going to be, but you guys are going to hear me coughing. All right. Whoa, how weird. You're funny, Jack. What's up, Jack? What's up, GG? What's up, Why Not? What's up, Almighty Beard Man? What's up, David Ryan? What's up, Mind Framed Elevator? What's up, Corey? What's up, Robin Hood? What's up, Nikki Not the One? What's up, Ratana? What's up, Evangelos? What's up, Raul? Okay. I was looking for something more specific, but that works. What's up, Zovi? What's up, MacMan? What's up, J. Marie? Hey, what's up, Nora? You hear me with echo. That should be something on your end. What's up, B707? Judgment's late, say it straight. What's up, Alan? What's up, JP? What's up, Richard? MacMan, switch to a cash account. Yeah. Nora, there's, I mean, it's not even like a shot in the dark, but there's just been like, the flu season has been really bad. A lot of people have been getting really, really sick. I know my hospital where I work is like constantly calling me, seeing if I want to pick up an extra shift, because we don't have enough staff like to cover the amount of sick people that we have right now. And that's just what it is. Cold and flu season. So, yeah, that's good advice. Say it straight. I don't have a small air purifier, though. I have a massive one. All right, so let's look at the big picture here on SPY. Zoom out to our daily candles. And actually, before we do this, let's go to a lower time frame really quick. So this is at least what I saw today, okay? Where are we? Tuesday. I'm just trying to find our open. So we opened below the 2024 value area high. It started acting as support. We lost it. And then initially, like, all of the selling that was happening was getting bought back up, right? But then we lost it. We made a new lower low. Then we came back up, started testing it again. And here, every time there was selling pressure, it seemed like the buyers were coming in pretty strong and pushing it back up. So like we'd have a candle down, a candle up, candle down, candle up, candle down, candle up, big candle up, candle down, candle up, candle down. You know, like it was literally just back and forth. And then when we got back up here to the 2024 value area high, I actually called out short on here. I called out puts. And I think everybody knew. I don't have the level on my chart, but somewhere right around here was our target, right? Not exact, but I know it was hit. 552 and 40 cents, right? So this was one of the call outs that we made today. Short from value area high down to our I don't even remember what it was now, September value area low. Excuse me. But like, frankly, I made so many call outs I couldn't even tell you guys like all of the call outs that I made, but this was definitely one of them from here down. And then again, we had buyers step in, right? We pushed it all the way back up. It actually looked like, you know, we were going to reject initially because like we literally tapped the value area high and then sold off, I think, for like a point, roughly. Like I thought they were going to go a lot lower from there. Yeah, so it's 2 points that we sold from there. And then buyers came back in and they actually brought it back above. But then, you know, same thing here. When we came back inside, there was just a lot of selling pressure, pushed it back down. This time here, we have single prints or a strong high, and they pushed it down pretty good. And it doesn't look like, you know, so far it doesn't look like buyers are coming back in like they have been before. A lot of wicks at the bottom. So I was talking about this. I'm not seeing the exact candles, but there was a time, I think it was actually right here, where I was like, oh, things are looking bullish. Like, every time we sell off, they're buying it up. And so I was thinking we were going to get like a bullish, like spike up. And then as soon as it started to move and we got to like the value area high, I was like, oh, never mind. Like now they keep selling, like every single time they push it up, they sell, push it up, sell, push it up, sell. And then we sold off. So we didn't see that here. Like here we we started to like sell off, push it back up, push, and so on and so forth. And then we got a couple of decent candles down. But at least as of now, like this should be a setup for the 80% rule. We've spent way more than 45 minutes outside. We spent way more than 15 minutes inside, retested, got a pretty good move down. And then I guess retested it again, and now we're selling back off. All right, so Almighty Beardman brought up footprint charts. There was some absolute nutty prints today. I need to go back to like the open. This is, oh no, that's not one of them. On one of these, I was actually pretty frustrated with myself. Because I missed it. I don't remember why. Or no, I saw it happen, and it didn't register fast enough what I saw for me to be like, oh shoot, this is a 100-point move, and I completely missed it. Where do the nutty prints start? Well, so this is one here. 2000. And from here, I think like they spiked it up and then we got like a 100-point move down. Here's another 2000 here. But both of these are like kind of in the middle of candles, which is not what I'm looking for. I feel like I'm missing something, but where was that print? It was like 1,000 order at the very bottom. Okay, I'm not seeing it, and I know it happened live. I know I took a screenshot, so let me just find the screenshot instead of trying to search for this. Yeah. Whoa. Oh, it's not as big as I thought. That's why I'm not seeing it. This came in, and this is on the buy side, or the bid side, I should say. So normally like a limit order, a limit buy, and from here we got like a 100-point move, and that would make sense why I'm not seeing it, because I thought it was a bigger order than that. But where was it? Here we have, I think this is it. I could be wrong. And then they just absolutely sent it like flying. All right, so this order came in at 19.4, and from there we went all the way to 19.553. I mean, depending on like how you're looking at this, technically it went to 19.614. But just that initial 5-minute candle went all the way like 140 points, which is just insane. And like, if you guys don't understand like the seriousness of some of these orders, where are they? Like this 2,000 and 2,000. I mean, yeah, some of this might be like retail, but when you have such a large order on one block of time, it's generally like a big boy. And to give you guys an example of the amount of money that this is, like assuming they're not using margin, right? NQ is $5 for every 25-cent move, which means if we multiply it by 4, it's $20 per dollar, right? We multiply that by 19,420. I don't know if I hit multiply. I did, okay. And then multiply that by 2,100. This mofo is not playing, right? That's $163 million order on NQ. There was some absolute like nut crazy orders that came in today. Like even this 338, like there's just orders where I was like, whoa, here's a 1,238. And again, it's going to be a mixture of retail, but most of that is going to be some big boy 656. Like when you see something like this, 40-0, 104-8, 656, like you don't even think, you just click buy and like close your eyes and ride the wave. And for another example, so this is 19,270, and we went all the way on that candle 19,368. Like, just close your eyes, just click buy. You don't even need to think. Here's one at the top, 586, or sorry, 568. And from there, you know, I forgot to see where we were here. 399, down to 305 ish. So an almost another 100-point move. Like, just, you don't see orders like this normally on NQ. This is something that you'd more expect to see like on ES. 300 there. Yeah, it was just insane today. Anyway, I'm done looking at this, but the orders were just insane. Let me close this. So why not? It's really hard to say. It could be they were on the ask side, so it could be a market sell, or it could be a limit buy. So, Almighty Beardman, don't pay too much attention to red or green. Like, you have to understand. I don't know if I have the book, but let me see. Order flow. I know I have it. Is this it? Okay. Order flow by Trader Dale. So you need to understand that buying and selling can happen on both sides, right? So on the bid side, I can have passive buyers, meaning that they're using limit orders to buy. and I can have passive sellers using limit orders to sell, right? And a passive seller would show up as green delta, right? Where a passive buyer would show up as red delta. So if it was just as simple as green is buying and red is selling, and if it's on the bid side, then they're selling, and if it's on the ask side, they're buying. Like, it would just be simple, right? So, why is it? See, you're confusing me now. Okay. On the bid side, you can have aggressive sellers, meaning they're using market orders or they're clicking bid. And we can have passive buyers using limit orders that would show up on the bid side. On the on the ask side, we can have aggressive buyers either clicking ask or market, and we can have passive sellers using limit orders. Right? So, Almighty Beardman, DM me on Thingamajiggerbopper. DM me on Discord. I mean, if you want the book, get the book. You can get this for free, I think, off of Trader Dale's website. Or you can, if you're like me, I like to have physical books. So I have the physical book and I also have the PDF. But I also have something else that I can give you if you want it. So just shoot me a DM. But so it's not as simple as green is buying, red is selling as far as delta is concerned. And it's also not as simple as on the bid side is selling and on the ask side is buying, right? Like it can be both. It's just whether they're passive buyers or aggressive buyers, or passive sellers or aggressive sellers. Is going to determine where they show up. So you have to figure out, like, when you see big orders come in, you have to figure out, like, does this look like a buyer or does it look like a seller? And that's the, I guess that's the difficult thing to figure out. Shoot, I just kind of realized I have about 45 minutes and I need to take off. So, hey, what's up, Elite Mark? Yeah, so I need to chart up SPY and get that done. I don't remember if I finished this conversation, but really for me, I think we did, but losing 2024 value area high and retesting it, selling off, coming back above, selling off again, this is looking bearish to me. If they're able to regain this, then we can start thinking bullish scenario. But as of right now, bearish. I would really like, obviously, to see them sell pretty significantly from here to where I can more confidently be like, yeah, we're in a bearish scenario. But really, right now, we're set up for 80% roll down, and if it plays out, this is going to be the target, right? Let's start doing analysis on SPY here. This is a huge selling day. Volume's nuts. Oh wait, that's a 5-minute candle. Weird. Kind of feel like I need to take that, but I kind of can't. Hang on one second. What am I doing? Okay. There we go. The last candle of the day was massive volume. This is still, significant volume, selling volume. Kind of this is a very indecisive candle, right? We have a pretty big selling tail from the top. I don't know why businesses do that. Like, if I didn't answer you the first time, I don't want to talk to you, right? Pretty big selling tail from the top, and then we have a pretty big buying tail on the bottom. MacMan, it's not going to change anything, I don't think. But again, that's just going to be an opinion, right? So, if you're, what's it called? Like, there's just nothing bullish about tariffs, and it doesn't matter, you know, if we say, oh, we're going to impose XYZ tariff, and then we go, oh, okay, not quite as much, but we're still imposing a tariff. Like, it's still bearish. Hey, what's up, Raven? So, I mean, oh, hi, Oliver. How you doing? Like, maybe that gives people a little bit more of a bullish perspective, but I don't think it's going to make like a huge deal. It's still a bearish conversation, if that makes sense. And I think what we're seeing today is that we're, you know, so like we can just use Tesla as an example. Like, if we look at Tesla, I feel like a lot of retail, you know, as soon as like we started selling, they were just like, oh, buy the dip, buy the dip, buy the dip. And even yesterday I was hearing people say buy the dip, right? And specifically talking about Tesla. And then when it went, you know, from whatever this is, like 316-ish, 317-ish, up to, I'm sorry, 217-ish, up to 237-ish, like people are getting really excited, right? I don't use these very often, but if you just like look, is this a bullish or a bearish chart pattern? And if we use our fibs, their next target is here. And if we use Elliott waves, which is what I use, we're going lower than the current candle, or the current low, the current lower low. So we need to break lower than whatever this is, 217.02 or whatever it was. I don't remember. But so based on Elliott waves, we're coming at least lower than this. And based on this massive bear pennant, we're going to 204.23, right? People seem to remember, you know, like, can you stop? When price is going up, you know, like people are like, oh yeah, healthy pullback, no big deal. Healthy pullback, no big deal. Healthy pullback, no big deal. But I guess when things are bearish, they see this as a reversal, but it's not. I mean, maybe it is. I could be wrong, right? We're playing probabilities. There's a chance they V-shape recovery from here, but not looking good from what I'm seeing. I could be wrong, but things are looking very bearish, right? And so I think what we were seeing. So Elite Mark, I saw your question the first time. Just a heads up. Do I have a poor person play? Nikki, you know what? I'm always looking for like trades, you know, for people with less money and whatever else. But at the end of the day, I can just only share what I see. And I didn't see anything, you know, for like smaller contract sizes. And it actually might not be that poor of a poor man's play. Or I mean, it might not be that rich of a rich man's play because... Why did I type in Tesla again? I don't know what the contract price is for 855 puts, but I don't think many people would be anticipating like a 35-point move on Netflix tomorrow. So they might not be too pricey. They could be. I don't know. I didn't like look at them, but I could be wrong. Dude, I keep typing in the same ticker symbol. Yeah. Where am I right now? I'm so confused. So, yeah, it's just wild to me. Like, you know, when we're bullish and things are going up and we get a little pullback, so, oh, healthy pullback. But when we're in a downtrend and we get a little, you know, a little bounce, people, oh, yeah, this is it. Like, we're reversing. And I'm like, no, it's just a healthy bounce before more downside. And again, I could completely be wrong, but this is just my analysis and what I'm seeing. Right now, this is just a pretty big bear pennant. And, you know, depending on what time frame you're looking at it on, it could look more clean than what this does. Like, this looks a lot cleaner than what I was just drawing. But it's there. Undeniably, there is a bear pennant here. And I think we're going to get more downside. And this is probably their next target. Where was I going next? And then Elite Mark, I'll do my best to answer your question. I don't know that I'll have time, but if I have time, I will try to answer your question. Again, today was a little rough, pretty choppy. There was a lot of good trades if you were patient. And like I said, I called out quite a few. I didn't call this one out because I wasn't at my computer at the time. I'm going to delete this just to get this out of my way. But if you grab puts here on the retest of this area that we were looking for, I mean, we were a little bit shy, but I talk about this 25 cent, you know, like zone around levels. This was your retest to get in puts. And if it was me, I would have been targeting the... actually, I'm not really sure. I might have just targeted... yeah, I would probably target the August POC. It's still like a 4-point move, roughly. I would be happy with that. If you were targeting single prints, you know, like you didn't quite get there at the end of the day, but you got close. Yeah. But yeah, just there was a lot of good setups today for people that were actually patient and waiting. I'm going to start charting SPY because, like I said, I've got to leave now in about 30 minutes. So let me chart up SPY, figure out what we're watching for tomorrow, and then I would like to try to answer Elite Mark's question to the best of my ability. And when I say to the best of my ability, like he's asking for my strategy. I feel like we cover that quite a bit on the channel, but I don't know that I'm going to have time to go over like full-on strategy, but I'll do my best. These lives, like Sunday through Thursday, is really just about looking at option setups for the next day, and then also looking at levels on SPY for the next day. So I don't really do like a ton of teaching, but like I said, I'll do my best to try to answer your question if I have time. If I don't have time, then unfortunately I don't have time. All right, single prints at the top and a poor low at the bottom. Love to see it. So basically strength at the top, weakness at the bottom. Let me look at this really quick. Do we have any major... I mean, so this just makes sense. Like 550 is a pretty big psych level. I would expect like a relief bounce there. So I'm going to put this on here, but I will do my best to guide you guys tomorrow. I'm going to say it again. I said this a few days ago. Don't try to catch a falling knife, right? Like if we're just like absolutely smashing through levels and I have look for calls here, don't be considering calls if we're just slicing straight down, right? But I think if we break through this, or if we come down to this, we should break this poor low. And I would anticipate that they're probably going to be looking to give us some kind of a relief bounce here. It might not be huge, but I would just take it from there back up to the poor low. And on the retest of the poor low, I would be looking to flip and take shorts or take puts. Okay. Oops, this should say calls. I highly doubt this will happen, but if by some chance CPI rockets us up here, at this area up here, you want to be watching for puts as well. Okay. This would be the least likely out of all of the potential scenarios that I'm watching for. How do I move this? Dude, just me being lazy and not wanting to retype this is causing pain. So I'm not going to draw a bunch, but you know, like basically when I'm done with this video, I'm going to post a screenshot in Keenan's, you know, for people. There's always going to be more information, like not intentionally, but I'm just not typing out a novel on my chart, trying to explain things for people that didn't show up for the video. But really, you know, it's just so much easier for me to speak and explain what I'm thinking and what I'm seeing. If they give us this, you know, I'd be looking to get puts here. Right. If they give us this, basically break any level, 3 5-minute candles, I'm going to be watching for puts. Here, same thing. Break 3 5-minute candles, retest, puts. Obviously, you guys can tell I'm not bullish, but I would consider calls down here at 550. Just depending on how we react when we get down there or how candles are looking on the way down. Again, if we're just dive bombing and smashing levels, I'm not considering calls at all, right? We're not trying to catch a falling knife. And I think like this pretty much just covers it. But again, like I'll do my best to try to call things out as I see them tomorrow. That's funny, Nikki. Well, tell the kids I said what's up, and tell them to also read a book every once in a while and actually, like, you know, learn something. so that you don't have to work hard when you're older. Anyway, this is what I'm watching for SPY tomorrow. If you guys have questions, let me know. I'm going to do my best now to answer Elite Mark's question. Are you still here, Elite Mark? Because that'll also put weight on my answer. Sensei Sin, I looked at Tesla. I'm sure you saw me go over it. Evangelos, go over the Netflix play again. I'll be posting it in Keenan's. But this is it. Actually, let me post this really quick while I'm thinking about it. Okay. Sorry, why not? Like, I see your question, but now that I've deleted levels, where was my single prints? Like here? They must have been here, right? Or, yeah, it must have been here. And you're saying, why didn't I choose that as my area to close versus this? And you're talking about on this move down here. We had already cleaned up the single prints, right? So if my single prints are here, and again, I could be wrong, but I'm pretty sure this is it. We already came through, cleaned up the single print, came up, tested the 2024 value area high. We also have a poor low here, right? Which to me indicates that price wants to go lower. And for those reasons, targeting September value area low. You could argue like closing here. You could argue closing here. And none of those would be wrong, right? So. And sorry, I didn't see your question till just now. Sorry, I'm just looking through chat really quick. Raul, you choose your own contract size or your own strike price. I'm giving you what I think is going to happen, but you know, with something like Netflix, you can even go lower on the strike price, and the you know, as long as we're moving in the direction, you're going to be making money. As long as you're not like way far out of the price range, you know. Almighty Beardman always. So if for whatever reason we gap down and we open down here and we come back up and retest this, I'm always using this as a bearish entry. Or same thing, poor low. If we gap down below, retest this, I'm using that as a bearish entry as well. Um, I'm not roasting the kids. You know what? Kids and, I'm trying to think of the best way to say this. Like, children need and deserve, like, time to rest and, enjoy themselves, have fun, be a child, right? Um, I think I don't need to do this anymore, but with my wife, my wife's Chinese. They can be very strict about education and studying and whatever. Um, and my wife really didn't like my son playing video games. And I explained to her, and if my mom was here, she would speak for me. When I was little, I was really into computers. Like, I loved computers. I used to do crazy ass stuff. Like, when I was like 6, I started learning computer programming. Like, I started teaching myself, and I started learning or I started reverse engineering things on my computer to figure out like how things worked. And from there, I started getting into hacking. And by the time I was 8, like, I was pretty deadly on a computer. Another thing that I would do is, like, my parents would put me to bed, and I would go lay down and pretend that I was asleep. And then when they would go to bed and fall asleep, I would get up and go downstairs and take our computer apart, or like take the toaster apart, or just whatever. Like, I had this mind where I wanted to understand how things worked. And so for me, like, when I was little, the way that my mom would always punish me was she would ground me from using the computer. And as an adult, I ended up taking the knowledge that I acquired through using the computer, and I was able to turn that into a career. Like, I did computer repair, I did IT work. I got to travel because I was good enough at IT that, like, people wanted me to go to other countries and fix their stuff. And so for me, like, now if you talk to my mom today and say to her, do you think that, grounding him and taking the computer away was a good idea? She'll say, absolutely not. I should have just let him do his thing and learn everything he can learn. And, like, I should have punished him in other ways. I'm not telling people how to be parents, but just, like, when you're a kid, there's a lot of pressure, like, you're in school all day and then you have homework, and you might get a little bit of downtime, and people are, like, so focused on, like, too much time in front of the TV or too much screen time or whatever. I mean, yeah, your kids should be involved in, sports and other activities, but, like, when they're home and they've got a little bit of time to themselves, like, let them do their thing, let them enjoy themselves and relax and have some fun. I know, like, for, like, my son, as an example, my 10-year-old, he's in MMA. Today, Tuesday, is, like, one of our busiest days. He's at the gym for, I'm just going to guesstimate, like, 6 to 7 hours. He also has school. He does Chinese classes in the evening. And his downtime, like, I'm never like, like, get off the computer, whatever. I just, do your thing, man. Like, he works hard all day. He's also in a band. He also has music lessons. So he has a lot going on where he's very busy. So, like, his downtime, I just let him do his thing. I don't bug him. I don't tell him to get off of video games. I don't tell him to get off the computer. 7-year-old, work really hard. Work harder than everybody else. Work really hard in school. Study hard. Read books. And then that way, when you're like 25, everybody will be working for you because you worked harder than them when you were younger. And then you won't have to work as hard when you're older, but you'll make more money than everybody else. Okay? But also make sure you take a little bit of time every day to relax and do something fun. Alrighty? And stop being sneaky. Okay. So yeah, anyway, that's just my little rant. But let's try to answer Elite Mark's question to the best of my ability. The question is, do I use Apex trading for futures trading? I don't know how these two are related, because it's like, do I use Apex? And if so, what's my strategy? I don't know. So like when I'm saying this, like, I'm not trying to insult you. I just don't understand the correlation between a strategy for trading and trading on Apex is connected. Like, my strategy for trading is going to be my strategy no matter how I'm, or like what broker I'm using, or if I'm using a prop firm or not. The only thing that would change is, depending on your account size, is how much you're risking per trade. But that's pretty easy math. Like, generally, I would say risk 2 to 3% of your account, at max like 5% per trade. So if you're using Apex, most people go, oh, I'm on Apex and I have a 50K account, right? So if we do 50,000 times 0.02, then you can risk $1,000 per trade. No, you can't. Because even though on paper it says you have a $50,000 account, you have the margin of a $50,000 account, but you don't have the drawdown of a $50,000 account, right? If we're risking $1,000 per trade on Apex on a 50K account, after 2 losing trades, you're done. So your actual account size on Apex, I believe the drawdown's $2,500 on a 50K. So you multiply that by 0.02, and that's your risk per trade. If you want to be on the riskier side, then you would do 0.05, and you can risk 125 per trade. So that's I don't know if that's what you were asking, like how much to risk. But based on your question, like, that's the best answer that I can come up with as far as trading on Apex. Excuse me. But that's going to apply to any broker. Like, at the end of the day, we're risk managers, and you don't want to risk more than like 2 to 3% of your account, and at the most 5% absolute max. And then you're asking if I trade on Apex. I don't. The reason that I don't use Apex is it's just not for me. Not anything against Apex as a company or anything like that, but I use TopStep. And the reason being, with TopStep, so this is like, there's so many facets to answering this question, but the trading platform that I use is Quantower. The reason that I use Quantower, as I showed earlier on the stream, it has footprint charts. If you don't know what footprint charts are, I know I can pull up a screenshot somewhere. Okay, so this is, well, that's not the best screenshot. This is footprint charts, where you can see all of the orders represented as a number on either side of the candlestick. And then this would be the bid, this is the ask. Then from there you have to, like, determine whether or not it's a buyer or a seller. But then a nice thing with with footprint charts is you get imbalances. So like up here, this is a sell side imbalance, and I don't know that this is the best example, but I'll explain it as if it was a good example. When you have, it doesn't matter, buy side or sell side imbalance, but this is a sell side because from here where the imbalance occurred, they sold off, right? And what you're looking for is like a full body candle like we have here, that opens and closes below the imbalance or above the imbalance. It doesn't matter. But a full body candle closing, opening and closing, either completely below or completely above the imbalance. Once that happens, they didn't give us a retest, but let's just pretend this is our retest here. Once we have that full body candle open and close below, then we're looking for price to come back to there, and we would be selling in the same direction, that the full body candle was. So in this instance, the full body candle is below. So when we come back to this imbalance, we'd be looking for puts. If the full body candle was above, when we come back, we're going to be looking for longs. Or sorry, I don't know why I said puts. We would be looking short. If the full body candle was above, when we come back to it, we're looking for longs. So this is one of the strategies that I use, buy side and sell side imbalances. And another key that I didn't mention with imbalances, you want them to happen at the beginning of a trend. Like you're not looking, so like, I don't know what's up here, but I'm assuming we're trending down and then this imbalance occurred. And so this isn't one that I would be interested in trading. I want it to happen close to the top of a downtrend or close to the bottom of an uptrend. And then when price comes back to there again, as long as I have a full body candle open and close above that, when I come back to it, I would be looking for longs. If the imbalance happened at the beginning of a downtrend, full body candle open and close below, come back, retest, and I'm looking for shorts. Okay. So hopefully that answers your question as far as the broker aspect. But so the reason that I use Top Step for a prop firm is through them. If you use them and you select Quantower as your trading platform, they give you free access to the features on Quantower. And like if we look at Quantower, it's sorry, where's pricing? Depending on what you're doing, like if you want the all-in-one license, it's $70 a month, and that would give you like they give you, well, that's not really what I was looking for. I was just looking for a picture. But it'll give you access to footprints. It'll give you access to bookmap, TPO, all kinds. There's a lot of stuff. But the main things that I'm interested in is like footprints and TPO. And bookmap's cool too. This would be if you're doing monthly, it's $70 a month. They also have a lifetime option for like $1,600. If you go with Quantower, again, this is free, as long as you're, like you won't get a lifetime, but as long as you're trading on a Top Step account, you don't have to pay the monthly fee. It's all free. The Stock Explorer, you switch your account from margin to cash. And that's how you get around day trading rules. Or have 25 grand in your account. One or the other. So, yeah, so I don't have a referral link for Top Step. I mean, I can give you a link to get there. And then also just make sure that you know this, for Top Step or for Quantower, you have to be using a Windows computer. So if you don't have a Windows-based PC, you won't be able to trade with Quantower, right? And then so yeah, if you have a Windows computer, Top Step is where it's at with Quantower. If you're wanting to use a prop firm, if you're wanting to use your own cash, then there's another option. What is it? AMP. So there might be other things like this, but like, oh shit. I really hate it when I'm trying to type in like a search and what I click, oh my gosh, really? Sorry. Bro. So what I'm trying to talk about is like resume browsing. Like I'm not trying to look at my history. Especially not with you guys in here. I don't think you want to see my porn. No, I'm joking. I want Google search. So if you go to Google and type in AMP Futures Free Quant Hour, it'll give you this link. You have to use this link. Otherwise, you won't get free Quant Hour. So I'll share this in the chat. But this would be for people that want to use their own money and not use a prop firm. If you deposit money with AMP, you'll get full access to the free version of Quant Hour for free through AMP. So that's the two ways that I would trade. Like basically, save yourself $70 a month by going through AMP futures, or if you want to use a prop firm, save yourself $70 a month and go through Top Step. As far as my strategy, nothing different than what I've been talking about, basically. I mean, it's a little bit harder to explain because what's it called? Sorry, I'm trying to think here. Let me clean this up really quick. I'm kind of just like always looking for retests, and it's kind of hard for me to put this into words because I feel like when people are first starting out, they should really just be focused on volume profile and TPO. And with TPO, like you get your single prints. So where is it? I feel like this is wrong. Oh, sorry. So TPO, you use regular trading hours. And I'm like so confused because I'm like, how do I have candles lower than my single prints, on TPO? And it's because you should be using regular trading hours when you're finding your single prints and TPO settings. But so the first real trade that I see is when we came down here to the single prints. I'm pretty sure I called out long today on NQ, but I'm not positive. But single prints, that's a pretty obvious like slap long, or if the single prints are at the top, slap short. And from here, I would generally target the POC. Depending, like there are scenarios where I would, like the 80% rule, I will target the low to the high. Where is the high? Up here. Or 80% rule down, high to low. But a lot of times, like on day trades, I'll close at the POC. I'm not really seeing too much of anything like clean today, but it was like a super choppy day. And then I guess also like ES is a lot better to look at than NQ if you're looking for like clean moves. Actually, you know what? Instead of me trying to explain this like by looking at charts, I'll just show you what I go off of. This is the easiest way that I can think of to show you. So if you get the book Volume Profile by Trader Dale, you can literally go directly to Trader Dale's website, and you can download this book for free. It'll ask you for your email address and a name, and you type in your email address and your name, and basically you're agreeing to receiving like emails from him, and you'll be able to download the book for free, like no BS, right? Once you have the book, if you don't want to get emails from him, you just unsubscribe and he's not going to email you. But this book is like absolutely amazing. Read it from cover to cover. I've read it enough times that I know that starting on page 25 is where we start talking about strategies. And I say read it from cover to cover. Memorize, from page 25 to about page 30. And the first trade that I'm looking for is going to be support, like a level where it's acting as support gets broken, and I want to see it get broken with strength turned into resistance, and here I would enter short. Inverse, you see resistance, 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 broken with strength, come back, retest, enter long. Your next trade setup that he talks about is the open drive, and that's basically where you have like sideways price action, not necessarily at the open of the market, but it does happen quite a bit at the market open. Sideways price action, big selling candle or big buying candle, come back to that level, you would enter in the same direction that that big candle went, right? Same thing here. Here, this is market open plus open drive. So this was the open. We sold off really hard from there. Finally came back, retested it. You enter short. Open drive here again. And then here for the third strategy, he talks about ABCD, or AB equals CD. I don't use this one personally, but that doesn't mean it's not good. It's just not something that I like to use. So those are really like the main strategies that I use. And then the best example that I can show you of this, just because I've talked about this so many times. On the 17th, actually, let's just do this. Where I think it was February 17th. So let's do replay to here. I think that's right. And then if we go to 5-minute candles, is it 5 minutes? Yeah, I think so. Tell me I don't have regular trading hours on. Okay. Where are we? Oh, I cut off too much information. Actually, let's do this. Actually, let's do this. There we go. Okay. 5 minutes. Should be, yeah, 22,270. So if we draw a line here, I'll zoom in so you guys can see this better. But and this is like an actual trade that I took. So, sorry, I'm getting more comfortable. And I have like 10 minutes. And so I'm going to cover this really quickly, and then I'm going to call it a night. If you have more questions, sorry, what was your name? Elite Mark? Like, let me know. You can DM me, whatever. I'll do my best to answer your questions. But I'm not going to be able to answer any other questions tonight. I'm going to go over this. Alan, it doesn't matter the time frame. You'll find like less imbalances on like higher time frames. But yeah, it'll be more accurate. But even the lower time frames, if you're using everything that I said, where the imbalance happens at the beginning of a trend, you're having a full body candle, open and close either above or below that level, and then you come back and retest it. It works out very well. So, hey, what's up, Luxury Gardens? So anyway, I sat down. Shoot, I want to. Oh, I can do this. Where is it? There we go. So I happened to sit down at my computer. I have my charts like always open, right? I sat down at my computer. It was like 10:55 at night, like literally to the T. And the reason I know all of this is because when I saw this, I shared it in the Discord channel. I was like, oh, this, was acting as resistance, turned support a little bit, then started acting as resistance again. And then we had a big candle just smash through it, right? So this is, it's like a combination of support and resistance flip and like a open drive, right? And so at 10:55, I sat down and I'm like, oh shoot, this looks nice. This looks clean. Like, perfect resistance here, and then we smashed through it. So I'm like, the next time we come to 22.7, I want to be long, right? And so I put in my order, 22,270. And at the time, the only information that I had is this. This is a poor high, so I kind of expect them to go a little bit higher than this. So I was like, let me just do it even, 22,270 and close at 22. Basically, targeting 22.3, but worried that it might be like a big enough psych level that we reject like before it. So I closed my trade at 22.9975. I placed my order. I sent this information to Discords, and then I shut down my computer and I went to bed. Right? No idea what happened until I woke up in the morning. And right after I placed all of this, they smashed through and they went much higher. So at this point, again, so we have a poor high here, which generally means like they probably will want to take price higher. But this would also be like a fairly safe place to close my trade. And if I wanted to be like on the safer side, like if I zoom in here for you guys, you could even argue like just close it where the bodies of the candles are and not the wicks, right? So any of those are good. 313, 316. But again, I literally closed my computer right before this candle happened. So I didn't have this information when I placed my orders. But so my orders remain the same. Entry 22,270. Take profit 22,299 and 75 cents. My stop loss, I can probably give you guys like a guesstimate of where it was, and I'll explain how I look for it. So if this is my take profit level, I need to make $2 for every dollar I risk. So we look at the risk to reward ratio, and basically what I'll do is I always kind of look left, and I'm like, oh, like, if they're trying to stop me out, they'll probably be coming like to here. And I'm looking like at the wick of this candle here and these wicks here. So as a minimum, I want my stop loss to be a little bit lower than that. And as long as I'm getting at least $2 profit for every dollar I risk, in this case, we're basically at 3-1. I'm good taking the trade, right? And this you could even move a little bit like to here where it's like resistance, broken through. But yeah, I just kind of look left and, see what I'm seeing. You could even argue, like, maybe put it at the bodies of these candles here, so like a little bit lower, something like that, and you're still getting 2.5 to 1. Doesn't really matter. As long as it's over 2 to 1, you're good to take the trade, right? So again, I'm sleeping. Starts playing out. So remember I told you they probably want to clean up this poor high, right? Here. They probably want to go higher. So remember this when you're trading. When you see poor highs or poor lows, that would be considered an incomplete auction. And generally they're going to want to take price higher, like they did on this one candle, where it's just one candle and then wick straight back down. This is a strong high. When you have a strong high, you want to close your trade before you get, even close to the top, because generally, this being a completed auction, they'll probably reverse it before they get there. A poor high, they're going to break above and clean it up at least a little bit, like they did in this instance, and then sell off again, or maybe they go and make a new higher high. I don't know, whatever. But so as you can see here, I'm going to delete this now because we don't need this anymore. I got filled, and literally, if you look at the low here on this candle, I was red by 1 tick for a fraction of a second, and that was it. And then came close to my profit target and kind of sold off again. Here we hit my profit target, and again, if I had this information, I would probably be targeting, at least 313. If I was awake, I would probably want to target the 316-ish level, because if I notice they start rejecting before that, I can always close the trade. But if I'm sleeping, I don't want them to come like 2 points from my take profit and reject and go and stop me out. So again, if I had this information here, I would probably target like 313-ish while I'm sleeping. And so if we just let this play out, they actually retest the entry again. They wouldn't have stopped me out. And then they finally eventually would go up and hit that 313 here, right? Now, I think a big thing to mention is, like, nobody could argue that this was a bad take profit, but you also can't argue that this was a bad take profit, right? The analysis is good on both. The information that I had at this point in time, this was a great place to close my trade. The information that I had, here, this is a great place to close my trade. And again, even like that 316 level would also be like a good place to close, especially once I see them, go up and clean up here. Like, pretty safe that they'll come right around, 315, 316, on a bounce. Again, so like, one isn't better than the other. It's just, what are you seeing? And, like, basically, if you were a student of mine and you said, I took profit here, I wouldn't be like, why wouldn't you take it there? Like, because this is just as good as this. Like, yeah, you get more money here, but there's nothing wrong with locking in your profits here. And especially, again, if we go back and we don't have this information up here at the top, this is a great place to close, right? So I was going to say more, but I'm forgetting what I was going to say. I know what I was going to say now. This is super important. So, like, if I don't know if it'll do. Yeah, it's not going to do what I want. At least I don't think so. Oh, it will. So let's just say you are targeting this, right? And with that, like, you have your stop loss a little bit lower because you've got more meat on the bone kind of thing. This is important. Like, this is our entry. This is our take profit. We came close to it and then sold back off. And if at any point, like you trailed up your stop loss, you would never make it to your profit target. So especially when you're learning, one trade a day for 6 months, no trailing your stop loss, only stop loss or take profit, nothing in between. Because what happens is when people are red on a trade, 100% of the time it's going to hit their stop loss. Or when a trade goes against you, 100% of the time it's going to hit your stop loss. But if you're trailing your stop loss, very rarely will you make it to your full take profit level. And so what happens is your risk to reward ratio is worthless, right? And I was talking about this today with somebody. Let's just say, I'm going to just make up because I don't have a dollar amount, but let's just say here I'm risking $250. And here I'm potentially gaining $850, right? Let's just say today this happens and I get stopped out and I lose $250. And then tomorrow I take a similar setup and it does this and I make $850. And then the next day it does this and I lose $250. And then the day after that, it does this, and I make $850. And then the next day, it does this, and I lose $250. And then I make $850. Am I still good? Like, just stop and think about this. Like, a really important book to read. I talk about it. If you haven't read it, you need to read it. Trading in the Zone by Mark Douglas. One of the biggest things that he talks about is accepting your risk when you enter a trade. When you enter a trade, like you should have a plan. You should have your stop loss, your take profit. You should know I'm risking $250 to make $850. And you should be comfortable with this going all the way like one tick from your take profit and then stopping you out. Because when you entered the trade, you accepted the fact that you have the potential to lose $250. And again, we're risk managers, and you have the potential to make $850. And if you just keep doing this systematically over and over again and not getting upset when it hits your stop loss, we're just playing probabilities, it's going to hit your stop loss. Another really good book to read, speaking on what I'm saying right now, The Best Loser Wins. Until you learn how to be a good loser, you're never going to be a good trader. So a lot of people, when they take a loss, they'll FOMO or they'll chase or they'll just take they'll take a trade without a good setup, and they'll just start slapping buy or slapping sell, really with no rhyme or reason, hoping they're going to make back what they lost. A good trader accepted, hey, I could lose $250 here, I could make $850. And no matter what the outcome is, they're not going to get upset and start, just randomly buying plays, hoping that the next one's going to make up whatever they lost. You wipe yourself off, if you need to. If you do feel some kind of emotion, get the fuck up and walk away, and don't come back to a computer screen or whatever, to a chart, until you have a clear level head. And really, you should just not trade until the next day if you're feeling some kind of emotions. But if you just do this consistently over and over again, you just really can't go wrong, unless you just absolutely suck at finding entries. If you're not able to find entries, obviously you're not going to be a good trader, but finding entries is not hard. And then from there, you just have to play your levels. And again, let's just say you're a decent trader and you're right 60% of the time. 40% of the time, you're going to lose. You can't let those losses sting and send you on a downward spiral of chasing and trying to make it back. You have to remind yourself, I'm going to be right 60% of the time, and the times that I'm right, I'm going to make way more than I lost on that one trade. And if I just keep doing this consistently, time over time, and keep growing my account, getting bigger and bigger, and able to take larger and larger trades, because now, you get to a point where risking $1,000 is only 2% of your entire portfolio. So then the wins start getting bigger. Of course, the losses will get larger as well, but as long as you're using one risk, two reward, and you're like a decent trader, you're stacking money. And eventually your account's going to get massive. And it's just a matter of being consistent, accepting your risk, being okay with taking a loss, and, knowing, like, especially if you're using like one risk, three reward, for every 3 trades you take, you only need to be right once and you're still profitable. Like, think about this. Like, it's mathematically not very complicated. I'm going to delete all these lines. So that's where it's at. Like, I could beat this like it's a dead horse. I kind of feel like I already did beat it like it's a dead horse. Read Volume Profile by Trader Dale. Really memorize the setups that he talks about for trades and apply it. And then the bigger part is, this is what people miss, is like the hardest part about trading is the psychological aspect. It's not finding setups. It's not learning how to chart. Like anybody can learn how to chart. I could teach a monkey how to chart. I can teach my 10-year-old son how to chart. So finding setups, learning how to chart, that's all easy. Not going on a downward spiral when you take a loss is not easy. A lot of people, what happens to them is like when they start to get decent at trading, right? They'll have like a 2-week streak where they just win. And let's just say in 2 weeks, they're up $1,200. And then they take one loss. And from there, in one day, they lose everything they made in 2 weeks and more. Because that one loss, they couldn't accept it. And they go on this downward spiral where they just and just like start taking ugly trades, just not waiting for good setups, not waiting for clean entries, and they just, I'm good enough, I can just click buy here, it's going to work out. No, it's not. And so in that one day, they lose everything that they've done, over 2 weeks. Emily, I'm not putting people down. You should feel proud about charting. I forget like the entire name, but BBG something in Keenan's Discord like tagged me today and showed me her chart, and I said something to the effect of, "My girl, like, good job," whatever. Like, obviously we have to learn how to chart, but I'm not saying it's super easy, but really, the really hard part of trading is the psychological part of trading. And until you get that down, you're not going to be good at trading. So, don't go on those downward spirals. What I really highly recommend, I got to wrap this up. I should have left 10 minutes ago, but what I highly recommend is one trade a day for 6 months. It forces you to be precise with your entries. It forces you to not start FOMOing and YOLOing after you take a loss. As long as you're holding yourself accountable and you're like, shit, yeah, I took a loss, but I'm not allowed to take another trade till tomorrow. If you do it for 6 months, on the other side of 6 months, you're going to become so deadly as a trader, you won't believe the person that you are in 6 months versus today. And with that said, you also want to journal every single trade on an electronic journal. I'm not going to pull it up right now. You guys can Google it yourself, but there's a free journal called Stonks Journal. All you have to do is sign up for an account, and you can go in there and input your trades and journal like what you did correctly, what you did wrong, so on and so forth. So that's a great place to get a journal for free. 1 trade a day for 6 months. Journal every trade. Make sure that you're, like I showed you guys on NQ. When I saw that candle break, I started planning my trade with the long position tool. If it's a short, you use the short position tool. You figure out your entry, your stop loss, your take profit. As long as it's at least 1 risk, 2 reward, you're able to take the trade. If you're not able to make $2 minimum for every dollar risked, then you can't take the trade. You wait for the next setup. And you just keep doing this consistently over and over and over again. 6 months, you become deadly. And one period to what you just said, I'm actually already very proud of you. And you should be proud of yourself. I don't know if you are, but you're on the right path. And you're going to be crushing in 6 months. You're going to be absolutely crushing. You'll see. So with that said, I really got to run. I'm probably missing some of the chat. I apologize, guys, but you guys know I love you. I'm not ignoring you on purpose, but I am running late at this point, and I can't stand being late for anything. So as always, I'm going to actually cut this short. Just much love, everybody. Much respect. Peace out, y'all. Shorty will be live at 9 p.m. Eastern going over market update for futures, so tune in for that as well. And we will see you guys tomorrow, okay? I hope all of this was helpful. I've now sacrificed not being on time, but it's not a big deal. We're just going to the gym. But I sacrificed not being on time so that we could try to, answer that question as thoroughly as possible. And hopefully, more than anything, like, if it helps one person, it was worth it. And I really hope that you guys benefit from this and you take what I said and run with it. Do the 1 trade a day, grow, be patient, wait for your setups. Don't let the losses send you on a downward spiral, okay? Peace out. We'll see you tomorrow. Bye.